Hi there, welcome to Kneppyinvests. Yes, I've been rubbing my hands all day because I had a fear that today could have been probably the blandest day in August reporting month, just because of the companies that were reporting today. Had a look at the calendar, but how wrong could I be? In fact, today might be the most exciting day because of the amount of intriguing, interesting reports that have been released today. Not only reports or intriguing reports, but also intriguing reactions from the market. Also, some interesting goings on in conference calls. In fact, there's one company I'll talk about today, and this company did make it into my top five. They started their conference call at 10:30 a.m. They made, I think the CEO made a silly comment, and the share price dropped about 15% on this silly comment. And I'll talk about this company when we or I discuss the top five stocks of the day. It is a company I own, and in fact, I needed verification because I did not listen to the conference call. I just needed verification on why the share price dropped. When I got the verification, I bought some more shares because it was more than likely a little bit of no reaction from the market, and not the sort of announcement I will sell off on or sell on. And there could have been, when I look at the top five stocks of the day, I'm looking at it right now, and the companies that did not make it, there's about a list of 13, 14 companies that could have made it any other day, but not today. Today was the wrong day to release your financial reports. Although one of these companies in the top five released their financial report last night, Yancoal, I'll just say that right now, Yancoal. They did make it in top five, share price down 15%. So when I do see the share price down 15%, I will include that company more than likely in the top five. But there are a few companies today whose share price have rallied quite a bit. We're talking about 10% that did not make it in the top five. And you'll see a lot of those companies when we look at the top gainers of the day. And that is the first thing I will do in this video. No tweets. I'll go straight to the ASX today, look at the best and worst performing sectors, indices, and also companies. Today has been another boring day, relatively flat, slightly up. Yeah, and still about an hour and 40 minutes left of trading. So maybe we'll see a little bit of movement during the rest of the day, although mining's had an okay day today. And then we'll look at the top five stocks of the day. And I'll probably go quickly through those companies that did not make it because I have quite a few. In fact, if we have a look at the reporting season calendar from Comsec, so I just had a look at this yesterday. ARB, Vicinity Centres, Baby Bunning, VGI Partners, Healy Group, Deterra Royalties, Reliance Worldwide, Ansell, Hub24, Ingenia, Monadelphous, Sims, Dexus, and Judo Capital. Had a read of those companies yesterday and went, oh, what a boring day. Tomorrow, I thought would be more interesting because we have Corporate Travel Management, Breville Group, Data3, AUB Group, Domino's Pizza, Venture Services, WiseTech, Babcorp, Brambles, and Pexa Group releasing their numbers tomorrow. And so I thought tomorrow would be a little bit more exciting. But yeah, I was wrong. Today was exciting, or is exciting because today has not finished. Okay, so let's get to the ASX today. We've already talked about the market up a little bit today, so nothing too exciting. I'm surprised that it wasn't up more because NASDAQ was up 1.32% overnight, S&P up 0.97%. I did see some tweets in terms of the S&P, some questions. When was the last time the S&P was up about 9 days in a row? I didn't see any definitive answer, but yeah, that you just see here, look at this chart, the S&P 500, what a V-shaped recovery has been since those weak economic numbers 2 weeks ago, about 2.5 weeks ago. What was that, March, or not March, what month is it, August, what was it, August the 5th or something like that? Let me have a look, August, yeah, the S&P 500 was down pretty big, August 1st, 2nd, and also 5th. And it's recovered really nicely and not that far off from being all-time highs. And I'd say the Nasdaq is similar, but a little bit more from the all-time highs. And the Dow Jones only up 0.58%, and that is also close to all-time high. So a little bit surprised we did not have a bigger day or better day. Possibly that's because the American futures are down. Who knows? I don't know. But a little bit disappointing. I'm a little bit disappointed. I expected a pretty good day on the Australian markets. Now let's have a look at the sectors and indices. And what do we see here? Real estate down by over 1%, probably led by some REITs. And I'm thinking there is a possibility that the reason real estate is down by that amount is because of Dexus. Let me just verify that. So Dexus did not make it in my top 5, but possibly I could have talked about it. And the share price of Dexus was down a fair bit because maybe distribution was low. I forget why. Let's have a look at the market cap. Yeah, there's Texas, down 7.2%. It's not a massive company. In fact, Goodman Group is by far the biggest company here, and that is down 1.18%. So definitely Goodman Group being down by that amount did not help, but Texas down 7.2% definitely did not help. Not the sort of company I like. In fact, this whole sector is not the sort of sector I like. The only company I like here is Goodman Group. I don't mind National Storage REIT or HMC Capital. There's a few companies, or Homeco Daily Needs. There's a few here I don't mind, but Opexa Group's in here as well. There you go. Anyway, so real estate's had a bad day, mostly because of Goodman Group and Dexus. Otherwise, a lot of other sectors are flat, apart from utilities, up 1%, IT up 0.94%, and materials. Good day for mining, up 0.67%. And gold's had a good day again, up 1%. Let's have a look at the ASX 20, up 0.1%. So I'm assuming, we'll say tall companies up 8 down. Well, 10 up, 9 down, 1 flat. And the best performing ASX 20 company today has been WiseTech. So their results will be released tomorrow. That's understandable because NASDAQ had a good day, and you would assume our biggest tech company on the ASX should have had a good day as well. Fortescue, BHP, and Rio Tinto have all bounced. So obviously iron ore did not do anything bad overnight. A lot of concerns out there, particularly among governments, how bad iron ore is doing, because although most of the governments, particularly the federal government, Australian federal government, is fairly conservative when they're doing their budget, because they probably need to be, and they should, when they're doing their budget forecasting, they should put in iron ore prices as low as they can, because it's better to be surprised by higher iron ore prices than forecast than lower iron ore prices than forecast, because that can completely destroy your budget. Anyway, banks have had a good day today again. Commonwealth Bank of Australia, P ratio is now like 25. Ridiculous, but that's the way she blows. And the worst performing companies in the ASX 20, Goodman Group. We already knew that. Aristocrat. In fact, Aristocrat's P ratio is like 22. In fact, it's growing at a rate probably 100 times greater than Commonwealth Bank. There you go. Anyway, it's the way she blows. Okay, so let's have a look at the best and worst performing companies on the ASX today. We'll start with the top gainers by percentage change. In fact, there's nothing really here. Green Technology, did they release an announcement? I'm pretty sure this company did release an announcement today. I'm pretty sure I saw Green Technology, or GT1, and they released a few. Investment and Strategic Framework Agreement with EcoPro. So there you go, GT1. I'm going to have a quick look at the chart for this company. I'm assuming they're doing hydrogen and maybe other green technology, and the chart looks horrendous. No interest in green technology. Let's move on to any others here. Fairly low turnover. A few others of these companies might have released announcements, but they're all these companies have fairly low market caps. We have to go bit further down the list. There's Control Bionics, up above 10 cents now. That's interesting in itself. I talked about that company the other day, did make it in my top 5 stocks of the day, and it's now above 10 cents. Let's have a look at these best performing companies on the ASX by market. And we are going to see a lot of companies who did release their financial results today, and many of these companies did not make it in my top 5 stocks of the day. So let's have a look. Ansell, up 7%. Did not make it in my top 5. I am trading Ansell, and I saw the numbers, and I was like, ooh, it's pretty ugly numbers, but the market doesn't care, up 7%. Reliance Worldwide Corporation, it is in my top 5 stocks today. And there's one reason why this company is in my top 5 stocks today, because I had a close look at these results, because it was the second company to release their results, and I wouldn't say I'm shocked by the market reaction, but and the reason the share price is up 8% is because the numbers slightly beat expectations. But there's another reason why I'm like, I don't know what's happening here with the market and Reliance Worldwide Corporation. Like, In fact, like many other companies on the ASX, it's significantly overvalued, particularly based off the growth and expected growth of the company. And I'll talk about that later when we look at the top 5 stocks of the day. ARB Corporation released their results, up 6.56%. Not in my top 5. Ingenia Communities, 6.1%. Judo Capital, up 9.75%. Did not make it in my top 5 stocks of the day. So you just see here that many companies released really good results today, or maybe not really good, but the market reaction to results has been good, and they have not made it into my top 5. That just shows you how interesting today has been. Nuix, massive day yesterday. It has, followed on today. A lot of excitement in that company today. Monadelphous did release results, up 9.86%. So just like Judo Capital. Actually, these results were better. I did like these results, but again, did not make it my top 5. Now, all these companies, I will have a look at the chart. McMahon Holdings did release results, up 9.48%. I also like the results. Baby Bunting, up 8.36%. Those results were pretty good. Maybe there's a bit of a turnaround happening with Baby Bunting. And I would have loved to talk a little bit more about this company because possibly it's breaking up. I'll show you the chart, but again, did not make it my top 5 because there were so many companies to choose from. So you could just see the amount of companies that had a really good day today because of their results. And so today, yeah, it's another reason why I'm a little bit surprised we have not had as good days I thought we could have, just because the amount of really good market reactions from financial releases, financial results. Okay, but on the flip side, there were a few negative reactions from market in terms of financial results. So let's have a look at the top losers today. Keybridge Capital, just fairly small. Bisalloy Steel, what is happening there? Something must be happening with steel. I showed you Bisalloy Steel's chart yesterday. It had fallen like a rock, and it's down another 19.43% today. Something must be happening here that I'm missing. They haven't released anything. And I'm surprised they have not received price and volume query from the ASX. I could do a simple, let's do it. Let's Google it. Because this is interesting. Bisalloy Steel news. Why is it dropping? That's a month ago. Protesters accused Bisalloy of Israeli arms deal. It can't be Bisalloy Steel. Yeah, it is. Cut ties with. Okay. So all these are from a month ago. Nothing up to date. Bisalloy Steel. What is going on with? If you know what's happening with Bisalloy Steel, because I could completely. Maybe it's just steel prices. I don't know. But Bisalloy Steel right now is just falling like a rock, down 20% today. This could be capitulation. Look at that chart. This could be capitulation. Massive volume coming through today, but the share price is near the low. That's not a good sign. So there could be a little bit more downside to come from here. So if you do know what's happening with Bisalloy Steel, I'd love to know. Is it just iron ore? Is it just what's happening in China? Is that all it is? That could be all it is. It could be just China because there's been a lot of China buzz about how there's not going to be any stimulus from the government helping the residential sector over there. China's growth nightmare just washed up on the ASX. ASX, I sound a little bit New Zealander when I say that. Some of this I did not know happened. Chinese and Philippine ships collide. Anyway, so there's a lot of chatter among chat. There isn't a lot of chatter out there in regards to China, and that's one of the reasons why iron ore is dropping. No stimulus from Chinese government to help the residential industry over there, and that could be the simple reason why Bisalloy's share price is dropping. I would love to see a price query from the ASX, and they should receive one because that percentage change in one day is fairly significant. Not only one day, 2 days in a row. Yancoal, down 15.8%. I did have to include this company in my top 5 stocks of the day because when it's down 15.8%, it's a little bit more than up 10% or up 9.5% like some other companies. And again, sometimes when results disappoint the market, although Yancoal's results probably didn't disappoint the market, it was something else in regards to dividends. And I'll talk about why there's been a sell-off in Yancoal today, and also Mader Group down 12.62%. This is another one where I had to include the top 5 stocks of the day because I had a look at the results and all I did was look at the numbers and went, oh, that's pretty good. But something has driven the market the other way, down 12.62%. And that's it. So let's have a look by market cap. So we have Yancoal. Texas down 7%, which is the reason why real estate or the real estate sector is down. Magellan Financial Group, they went ex-dividends, so that is nothing to be concerned about there. Iris down significantly today. I think this is on the back of their results yesterday, and maybe some analysis have run some numbers and have just gone, oh, we should sell today, and maybe that's just a bit of a, who knows. But there's sort of a delayed reaction. There's Mader Group, Audinate, really big day update yesterday, so naturally enough down today. Solvar did release results today, down 10.25%. SKS Technologies down 5.36%. I am going to pay close attention to this one. Yep, it's only down 3.79%. This is an interesting one. So this is the case where I needed verification of what happened, what caused the share price to drop, and I want to talk about this a little bit more. I'm really happy the share price has rebounded because I'm already up a significant amount on that. I suppose you could call it opportunistic buy, and you'll understand why when I discuss SKS Technologies. In fact, SKS Technologies is my number 1 stock of the day. There you go. Integrated Research. I did not put Integrated Research in my top 5, but I really should. In fact, I didn't even put it into the companies I was going to talk about. But there has been a violent reaction for Integrated Research, up probably about 10% on open, maybe even more than that. Now it's down 7%. And I don't know if I'll talk about it. I am trading Integrated Research. I have taken a little bit of a profit, so I'm glad I did that. And the results didn't look that bad. However, there was one little bit of commentary, just one. If I remember, I'll show you that little bit of commentary that would make me a little bit nervous going in or starting trading today. But seems like the market either ignored that or missed it. And maybe they saw it later in the day, and that's why the share price is now down 7%. Okay, so let's get to the top 5 stocks of the day because we're already 15 minutes into the video, and I don't want to fall too far behind. So let's start off with Yancoal. So it's down 14.37%. It's been down a little bit more than that. In fact, the share price got down to a low of $5.35, which means share price would have been down almost 20% at one point today. Okay, so Yancoal, coal. If you do have a look at the numbers, you might say, okay, I understand why the numbers are down. Where's the is that the one I was looking at? I'm not even sure that was the one I was looking at. Yeah, I did look at something. They released their results last night at about, so just shy of 7 p.m. I'm just going to open up the other 2 announcements because there was a table I saw, and I'm just did not see the table in well, maybe I did. Maybe it was this table I saw. Maybe it was this table. No, it was this table. It was this table, yeah. It was actually in the results itself. Okay, not surprising, revenues down 21%, profit down 59%, net profit after income tax attributable to members down 57%. Profit per share at 31.9 cents. All this is not surprising at all. Also talking about a dividend. Now, the problem here is, and this is, I think, the reason why the share price has created today is, if I can find it, right here, this little paragraph here. The board has not declared an interim dividend in respect of the 6 months ended 30th of June 2024, with the retained cash providing flexibility for potential corporate initiatives and may be distributed in the future if not utilized. I would not be surprised if many shareholders of Yancoal are just shareholders because of the dividend and expected dividend. And when people read that, or shareholders read that, they go, Oh, I'm not going to get a dividend. Well, I'm selling. I'm out of here. I have not had a look at the half year report. So let's have a look at how much cash they do have on hand. Now, they could be concerned about coal prices, but coal prices actually don't look that bad. So let's have a look at the amount of cash on hand. So they have $1.546 billion of cash on hand, a fair bit of trade and other receivables, 469 million, inventories of 426 billion. Now, both cash and inventories have risen from last year, although trade and other receivables have dropped. So they've actually increased their cash on hand. Do they have much debt? Interest, not much debt. So what's going on here? I don't have any idea. I wonder if they mentioned this more in the presentation, which I did not open up. Maybe they did talk about it a little bit more in their presentation. I should have actually looked at this before I started talking today. I didn't even think about it until right now. Sometimes they will. No, they're just talking about. I don't see anything here about like a capital allocation. I'd love to see a capital allocation section. What do they think about the capital or the money they have produced in their operations, and what are they planning to do with it? I love to see that. Okay, here is they're talking about dividends. So they are net cash. So there's no issues there. The board has not declared an interim dividend, blah, blah, blah. Yeah. So I'm a little bit confused about what's going on with Yancoal. And there also could be some concerns that they're going to make some silly acquisitions, because mining companies tend to do that historically. They have done that for the last 20, 30, 40 years. Whenever they're cashed up, they make silly acquisitions. There is a time to make acquisitions. And I think a lot of shareholders of this company would prefer the dividend instead of silly acquisitions. Now, there is a possibility that the company finds something that is of good value and make that acquisition. And that could be a good acquisition. But unfortunately, a lot of mining companies' management have made bad decisions when they are cashed up. So that's the whole reason why I think Yancoal is down today, is because of that dividend strategy, a capital allocation decision. And capital allocation decisions are the most important job of management. In this case, they're getting a cross, getting a D- from the shareholders and the market. Now, in saying all that, the share price has recovered nicely today. So it has almost bounced off a nice little support level. So there could be some value here at Yancoal at these prices. But it has surprised the market. Share price was in a nice uptrend. And possibly that uptrend has been harmed today. So that's Yancoal. Just a nice, interesting reaction from the market. Coming in at number 4, we have Reliance Worldwide Corporation. Share price up 8.3%. Now, I did have a look at these numbers and I went, ooh, this is not very good. Now, I don't follow this company too closely. So everything's down. Where's the table with all the numbers down? Did I go straight past it? Somewhere. Is this it? No, that's not it. Let's have a look. How many pages was that? 6. So I want to open the one with 2 pages. The company's raised so many now. No, it's not this one. There's a table. I'm sure there's a table with the percentage changes somewhere. Anyway, everything's down. That's the most important thing. Everything is down. Revenue down. EBIT down, although there was one that was flat. Profit down. But here's the most important thing. This actually was a slight beat to expectations or consensus. And I was like, okay, but the PE ratio of this company is like 26, which is saying the market is expecting some pretty good growth. And if you're not getting growth now, then the growth should be there in financial year 25, financial year 26. That is what I am reading when I say that the market thinks or expected bad numbers this particular year. And then the market reacts well, share price up almost 10%, which means now the PE ratio is probably like 27. But they did release an outlook, and the outlook, to be honest, was quite negative. So trading outlook, uh, straight away, they're mentioning there's a bit of uncertainty. So trading conditions partly depend on economic conditions. Interest rate rises still since 2022 have impacted residential markets, blah, blah, blah. For the first 6 months of trading in financial year 25, Reliance Worldwide expects group external sales to be broadly flat within a range of up or down by low single digit percentage points. So they're not expecting any growth in the first 6 months of the year. They also mention new products, revenue initiatives, cost reduction, efficiency measures. But they also mention that there's a lot of uncertainty and they're not giving any guidance out, any quantitative guidance out for financial year 25. So they are still being a little bit bearish or even a little bit conservative just to know what's going to happen in financial year 25. So for this company to justify a P ratio of like 27, this company needs to grow significantly in the next few years. Otherwise, this company is significantly overvalued at current levels. Fairly similar to Reese, what we saw or I mentioned yesterday. So, yeah. And I saw that outlook and I thought, yeah, the numbers might have just beat expectations. And I did tweet this and someone did reply that. But that outlook is still, it's up in the air how this company is going to perform. So a little bit surprising there. And if you have a look at the chart, I do or am searching for breakouts. And with Reliance Worldwide Corporation, not really a breakout. So that's good. And the share price did get really high after results in February. Share price got to about $5.90, fell back all the way to $4.30. I think there's going to be a lot of volatility in Reliance Worldwide moving forward because the valuation's quite rich and I just don't know. I don't even think the market knows what's going to happen with this company over the next few years. And if the company disappoints, if the company releases any sort of downgrade, any sort of announcement suggesting that conditions are probably a little bit worse than they expected, and even though their expectations are not that good, that could really put a death knell to Reliance Worldwide Corporation share price. So this is a case where if you look at the risk and reward, there's just too many risks for me. The rewards, I just can't see the share price rallying all that much from here. So this is definitely a no-go for me. And I just wanted to talk about it because even though when you look at the numbers, the results, and you just look at the results and think, oh, what a horrible year for Reliance Worldwide. It doesn't matter. The results don't matter. It's how those results compare to expectations, consensus, or any sort of guidance from the company, and also their outlook. In this case, the outlook, I think, was quite weak, but the market didn't care. It was just that the results slightly beat expectations, and that's the only reason share price is up about 9%. Really intriguing, in my opinion. There's still no way I'd buy shares in this company at this point in time. Valuation matters. So I will be following the share price movement of this company moving forward because I could be completely wrong, but that's okay. There's a lot of opportunities on the market. So that's Reliance Worldwide coming in at number 4. Coming in number 3, SRG Global. You might notice share price has not moved. They are doing capital raising. So this company announced a capital raising for an acquisition. I won't talk about the acquisition. I'm not the biggest fan of acquisitions, but this could be a good acquisition. They're talking about it being EPS accretive, but they always say that. You just don't know. A fairly big acquisition, $110 million. I think it was $110 million. I'm lying. I wasn't going to talk about it, but I'm talking about it. $111 million on a cash-free, debt-free basis. They are doing a capital raising, $66 million in a capital raising, and $50 million through a debt. So I'm not going to talk about the capital raising. What I'm going to talk about, and I'm a little bit upset here because I am trading SRG right now, and I saw the results and I went, "Oh, this results are pretty good." Not only that, they did a profit upgrade. In fact, it was an EBITDA upgrade, but for financial year 25, not for financial year 24, because these are financial year 24 results. But when you do an EBITDA or any sort of upgrade at this point in the cycle or this point of the year, things are moving in the right direction for the company. And I saw the results before I noticed they were doing acquisition. I went, ooh, this share price is going to pop up higher without doubt. And then I saw they went in training halt and the acquisition. I went, dang it, why did you do that for? Why not release the results today? Share price pops up 15%, and then release the acquisition news tomorrow. I know. So let's have a look at the results of this company today. That they releases today, not the results of the company today, because that would be ridiculous if they release their results in a one day. They'll be doing that every single day. Okay, this table is a really beautiful table. So if you look at the revenue growth from $570 million in financial year 21 to over $1 billion, EBITDA has gone from, well, it's doubled over the last 3 years. EBIT's more than doubled, which means margins are expanding, particularly towards the bottom line. NPAT is up has almost tripled in the last 3 years. And you can see that with the NPAT margin. It's gone from 2.6% to 3.8%. One slight little, very slight concern is that the margins slightly contracted in financial year 24, but they have expanded over the last 3 years. Dividends have risen from 2 cents to 4.5 cents per share. Earnings per share from 3.3 cents per share to 7.7 cents per share. So really nice growth over the last 3 years. In fact, they mentioned here, little box, 133% earnings per share growth over the last 3 years. So I saw that and I went, ooh, okay. So earnings per share 7.7 cents. Company share price is 86.5 cents, which means this company has a P/E ratio of 11. And I went, ooh, that's pretty cheap. And I'm just excited because I'm trading this. So it's a trade of a company that I think is really good value. And those tend to be, based off research, the best, most likely companies to beat the market when you are trading. Now, the other thing I really liked about this announcement and why I thought the share price would pop up was because they increased guidance for EBITDA. Financial year 25 EBITDA guidance increased to circa $125 million. This year, EBITDA was $98.5 million. So they are expecting a 25% increase in EBITDA. Now, one of the reasons why that EBITDA might have been increased is because of this acquisition. And they have this little number there too. Yes, SIG Global, 109 million. So we're talking about 10% increase, organic increase, plus 10 months from Diona, 16 million. So that's the reason, or one of the reasons why there's a really good EBITDA increase is because of this acquisition. So there is potential that this guidance increase or this upgrade was because of this acquisition. Well, could be, it is because of this acquisition. Now, in saying all that, I think this company is cheap. I think this company is good value, particularly because it has really grown over the last 3 years, and there's potential this company could keep on growing over the next 3, 5, 10 or so years. Okay, so let's have a look at why I bought a position. So I bought at 93.5 cents, so a little bit down from when I bought. And this share price of this company did drop during 2 weeks ago. It hasn't really recovered since then, which is disappointing. But I really expect the share price to pop up on these results. But it didn't because they're now in a trading halt. So good day for SI. Well, I shouldn't say that because share price has done nothing. Anyway, so it's SRG coming in at number 3. I think it's pretty good value. Now on to Mader Group. Is this good value now? With the share price pulling back 11%, it was down by a little bit more than that. In fact, the share price was down about 16, 17%. So we have seen the share price recover. That's usually a good sign that there was a bit of an overreaction from the market. People have seen some value, sort of like me and SKS Technologies. Share price, oh, no, it's down a little bit now. So we have seen a little bit of selling. I think people are just fearful. They've seen the share price sell off and they've got, oh, something's bad happened, although the volume is fairly weak. The volume that drove the share price from $1.52 to $1.48 was fairly weak. But anyway, this is not about SKS. This is about Mader. So share price has recovered today. Now, I initially had a look at the numbers and I went, oh, these are pretty good. I'd say possibly this is probably to expectations or close to expectations. We're talking about revenue up 27%, EBITDA up 32%, profit up 31%, and net debt down 27%. I thought, oh, pretty good numbers. Then I went to do other things, came back, and I saw the share price was down like 18%. I was like, ooh, what has happened here? So either the results were not to expectations, so even though the numbers look really good, maybe the market was disappointed, or notice they did to have a financial year 25 guidance, or maybe the final dividend disappointed, but probably unlikely, or financial year 25 guidance was weaker than what the market probably hoped. And I think that is the reason why Mader Group is down. The financial year 25 outlook is probably a little bit weaker. So they're forecasting revenue of 870 million, which is a little, it's up from last year or this year. Yeah, last year. But what percentage change? That would be still high double teens percentage change. But NPAT of 57 million. So this year it was 50.4 million. So we're talking about NPAT increase of just over 10%. This year it was 31%. So a market decrease in profitability for financial year 25. Now, there is a chance a company will release a profit upgrade. There's a possibility. Maybe the management of this company is really conservative when they're doing guidances or issuing guidances. And I would love management if they did that or continually do that. But just based off the market reaction, the market believes it. And yeah, so that's why I think Mader Group is down. It's just the weaker than expected financial year 25 guidance. Now, let's have a look at the chart for this company. Now, this company was once a bit of a market darling, not anymore. Beautiful uptrend from it broke out in July 2021 at a share price of $1. And that was one of the most beautiful runs you've seen the share price for a while. Share price went all the way up to $8. Yes, an 8-bagger over a 2-year period. Share price got to $8 back in the middle of 2023 and has really struggled since then. And yeah, in fact, today share price got down to a 1-year low. But we have seen a nice recovery in the share price. I'm just going to have a look at the 1-minute chart. When was the low in the share price? It was almost on open. In fact, it was at 10:06 a.m. That was the low in the share price. And the share price has recovered. So it was just those retail investors selling out, panicking on open. Sometimes you'll see that. And that's all she wrote for Mader Group. And the share price has bounced quite nicely today. Would I buy Mader Group right now? No. The chart, share price going sideways. It's consolidating. The share price could consolidate for the next 3 years, 5 years, 10 years. Don't know. There is that possibility. But this, when you look at the chart of Mader Group from July 2021 all the way through to the middle of 2023, a beautiful looking chart. So that's Mader Group coming in at number 2. Coming in at number 1, we have SKS Technologies. Really interesting. Share price opened at $1.62, went to a high of $1.66. Yesterday it closed at $1.58. So the share price was up about 5 to 6% at the height. The company did a conference call at 10:30 that started at 10:30. So again, conference call that started at 10:30. Results were pretty good. I'm just going to open up the results. One thing I was looking for in this company was margins. I was satisfied with margins. So we're talking about revenue growth of 62% up to $136.52 million. They're expecting, again, revenue of more than $200 million in financial year 25, if I remember correctly. EBITDA, $9 million. Massive amount of work on hand, $160 million. Cash flow from operations, $8.42 million. And I'm pretty sure they were profitable by, here it is, profitable by $6.6 million. Which means the PE ratio of this company, based off their profit this year, is about 30. It might be under 30 right now, based on the share price movement. So SKS Technologies, markup is 164 million. Yeah. So the PE ratio of this company, so divide 164 by 6. It's roughly 27. It's probably a little bit, actually 6.6. We'll do 6.6. So the PE ratio of this company is roughly 25. Now, if the company can keep on growing, and there is signs the company could keep on growing significantly, that's a fairly low PE ratio. We're talking about, say, PE ratio as a bank, CBA, and CBA ain't going to grow. Sure, there's less risk in CBA, but I'd rather take on the risk with this company that is growing significantly and has the potential to grow significantly in the next few years. So the results were pretty good. The market liked it. Fine. 10:30 a.m. roll along. The conference call started, and we saw massive selling coming in just after the conference call started. So let's have a look at the chart. SKS Technologies. It's a pretty good looking chart. So I've bought some shares at $1.04, $1.30, and today at $1.40. What did I buy? $1.44, I think. Yeah. So let's have a look at the 1 minute chart. Here he goes. Yeah. So in fact, it's pretty rough, but you can see a massive drop off in share price at 10:40 a.m. So just after the conference call started, and from 10:40 a.m. to 10:47 a.m. So in 7 minutes, the share price dropped from $1.61 down to $1.41. What happened in the conference call? And I have confirmed this from 2 different sources because I wanted confirmation before I bought some shares, and that's me buying some shares at about just after midday when I did get dual confirmation from 2 separate sources. Now, I did not go into the conference call. I just don't listen to conference calls. And I wonder if, I doubt it, but sometimes FinChat can put in conference calls pretty quickly. What you can do if you do have FinChat, no, they don't have it here. So I was looking at, what company was I looking at the other day? I forget what company I was looking at the other day. I wish my memory was better. What company could I have been looking at the other day? I'm just going to put A2 Milk. Okay, yeah, so this was A2 Milk from yesterday. Here's a transcript from the conference call. So this is one thing I do like about FinChat. You can look at or read conference calls. Unfortunately, it's not up there now for SKS Technologies. It's probably a little bit too small of a company. But they did have a conference call at 10:30 a.m. And a little bit into the conference call, I'm not sure if this was a question or if for some reason the CEO, I'm pretty sure, I could be wrong, I have a feeling it might have been the CEO who stated that they have been getting pressure from, I don't know who, but they have been getting pressure to do a capital raising, and they are thinking about it. That's what he said. They are, maybe pressure is the wrong word. No, I'm going to say they are getting pressure to do a capital raising, and they are thinking about it. That is all that was needed to send the share price from $1.60 to $1.40. And yeah, I for some reason, I honestly believe that management of ASX companies should get a bit of training how to deal with this pressure. I'm not sure if it was investment back or if it was from fund managers. And what they want to do is to buy shares at a lower price than what they are right now. They want to take a position because they see the potential of this company moving forward, but they want to get shares at a cheaper price. So they will encourage management. They'll tell management, hey, the share price has run pretty hard. Now's a good time to do a capital raising, increase your cash on hand, and that way you can grow at a little bit stronger rate in the future. But we want to we want to guide you through this process. So we want a lot of money from you, and we also want some shares from you as well. And we want this to be done at a discount of, say, 15%, so we can take a fair, large allotment. And the very fact that the management said, oh, yeah, we've been thinking about it, ooh, that's the reason why the share price sold off. That's it at all. That's the simple reason. Nothing else. Nothing wrong with the results. And as soon as I heard that from 2 different sources, I went, yeah, I'm going to buy some shares, because there's probably a pretty big chance that this capital raising will not go through. I have actually heard from some shareholders who are pretty, I wouldn't say upset, but a little bit angry that this actually happened in the conference call. And I think they're probably upset because the share price did tank. It just shows you what can happen to the share price if it tanks. Or if they do, if there's any even rumors of capital raisings, because more than likely the capital raising will be done at a discount. And I could tell you that if this pressure is being led by fund managers, the management of SKS Technologies should go back to fund managers and say, if you want shares in this company, buy on market. And they also announced a dividend. So here, dividend distribution. So if you're doing it, if you're issuing a dividend to your shareholders, you don't have to do a capital raising. This company, in fact, let's have a look at their accounts. This company is not short of cash. The only reason they would have to do a capital raising is if they are thinking of doing a pretty big acquisition, same sort of thing or setup as SRG Global. That's the only reason you really need to do a capital raising, and you don't want to get into debt. So let's have a look at the cash balance. Let's go to the cash flow statement. Well, that's note 8, so I've gone way past it. No, let's balance sheet's fair enough. So current cash, 3.36 million. Trade and other receivables, 42.3 million, up from 18.1 million. So there are a lot of cash coming to the company because of that significant increase in trade and other receivables. That's changing in working capital. Trade and other payables up a fair bit as well, 36.8 million. But trade and other receivables have grown at a greater rate than trade and other payables. So the change in working capital is actually detrimental to the cash flow statement. So have a look at the cash flow statement. Operating cash flow positive 8.4 million. There was a change in working capital. In fact, if we go to note 21.8, they might actually mention it. This could be reconciliation. Yeah, here it is, reconciliation of cash flow from operations with profit after income tax. And they might have a change in working capital. They do. They don't state it. But this change in net assets and liabilities, this first little section, actually the whole section is sort of a change in working capital. And there is a bit of a change in working capital. If they didn't have that change in working capital, the cash flow from operations would have been maybe $10 million or so. Anyway, so this company is not in need of any cash unless they have a really big project. That's another reason why. They have to spend money like capital expenditure, or they're thinking of doing an acquisition. Again, capital allocation is the most important decision of the management of a company. When you're at the point where SKS Technologies find themselves, where the company is generating a fair bit of cash, what are you going to do with that cash? Acquisitions, dividends, share buybacks. You should probably not be thinking about capital raising unless you really need to do it. That would be my recommendation to the management. And I just think this pressure, they're getting, this pressure from fund managers, investment bankers, because these fund managers and investment bankers are only thinking about themselves. They're not thinking about the company or SKS Technologies. They're thinking, how can we get some money from this company? Anyway, and that is why SKS Technologies is in the top 5 stocks. And there it is, up. Only down 4.4% right now. It was down as much as 10%. Share price got down to $1.41, 7 minutes after they mentioned that capital raising thing. And I won't be surprised to see the share price up 10% tomorrow, because once this little bit of fear of a capital raising sort of flickers away, the share price will rally because these were pretty good results. And the share price is not that expensive. Okay, so opportunistic buy for me today with SKS Technologies. Okay, so 47 minutes into this video, and there's quite a few financial results I did not talk about. So let's go through some of these very quickly, just by looking at the charts. Ansell. My first thoughts about Ansell was, share price up. What was it? Share price up 7%. I am trading this. There's me buying at 25.68, and I'm wrong. And in fact, this is possibly the definition of a breakout. The one thing I'd probably do with Ansell is look at the valuation, just like Reliance Worldwide. And although Reliance Worldwide is not a breakout, this is a breakout. This is a definition of breakout. Good financial news, if it is good financial news. Share price at a 6-month high. Well, at least a 3-month high, preferably a 6-month high, even better, 1-year high, and this is definitely 1-year high, and also some pretty good volume coming through. So Ansell is a breakout. Let's have a look at some other companies. Well, my second company is Kathmandu or KMD Brands. They did not issue results, but they did issue a trading update. They released their results because their financial year finishes at the end of July. So they should release their results by the end of September. I'm pretty sure that is right. I can verify that. Did they release results in March? Yep, they did. 19th of March. Share price up 6.8%. I did make fun of this on Twitter. And the reason I made fun of KMD Brands, I'm sorry, KMD Brands, I just had to. When you look at their trading results, everything's negative. So negative revenue. But they did mention Ripkill and Kathmandu sales have shown continued improvement on first half sales trends during both the third and fourth quarters. So in a way, they're saying the negative numbers are not as big as they were previously. So still negative, but they're not quite as big. And that's positive. I would say this company is starting to look a little bit more interesting. I wouldn't call this a breakout, but it's getting close. The reason why is the last time share price was this high was back in May. So we're not really getting to the point where I am confident the share price of KMD brands is breaking out and will move higher from here. Other companies, Monadelphous. Now, one of the reasons why I decided not to look at Monadelphous is the chart. So even the share price is up about 10%. The chart, it does nothing for me. For some reason, the share price tanked before these results were released, and now it's up. But no interest in Monadelphous right now. It could have been good results. I actually didn't mind the results. I thought they were pretty good. But the chart, no, it's not for me. I want to see a breakout. I want to see at least a 3-month high, sort of like Ansell. Next one is Baby Bunting. I thought these were pretty good as well. The market sort of agreed with me, but again, I look at the chart and go, not yet for this company. I'm just not there for Baby Bunting. A McMahon Group, I like these results too. So a lot of these companies did release results that I quite liked. And this is actually a pretty good looking chart for McMahon. A nice uptrend. I do see some value even at these levels. I'm going to have a closer look at the results because is this good value at these prices? The market liked it. Share price up 7%. Share price was up probably about 10% at one point today. And share price at a multi-year high. In fact, the last time share price was this high, well, we have to look at the weekly chart. The last time share price was this high was way back in 2013. We're talking about a decade high for McMahon Holdings. Yeah. Dexus. I did hear that Dexus, share price down about 7% today, or 8%. I did hear Dexus, something about a lower than expected distribution. Let's see the news. I have a. Let's have a look what Motley Fool says. Not that they're always right, but disappointing guidance. There you go. Underwhelming full-year result and disappointing guidance. Doesn't mean that Motley Fool is right. What did they say about Mader? Let's have a look. However strong as growth was for Mader, it was still short of the market's lofty expectations, as was its guidance for financial year 25. And Yancoal, they just mentioned the results, and the board did not declare a dividend. Okay. So I will make fun of Motley Fool, but sometimes they're right. So that's Dexus, but again, I just have no interest in this company. XRF, this is a company I own. And sure, the share price is up 5.67%, and the chart looks pretty good. I thought maybe the market might not have enjoyed the good growth the company experienced, but yeah, the market has liked it. Solver, this has popped up on my trading radar and may not be popping up anymore. Looks like it was trying to break out. Yesterday, the share price went up 4.3%. Now the share price is down 7.8%. So obviously the results have disappointed the market. ARB Corporation, not quite a breakout, but getting very close to a breakout. But valuation again for this company, P/E ratio 35.8. I'm going to have a closer look at that. That seems like a lot of blue sky is priced into ARB Corporation. Sure, this company's great. A really good quality company, experiences really good growth, or does it? Yeah, anyway, so yeah, I don't know. Valuation matters it always matters, no matter what company. EOL released their results like at midday. Share price up a little bit. Market has liked it, but I have a feeling it's on fairly low volume. Let's have a look. You can see the massive difference between the first buyer and the first seller. Buyer at $4.28, seller at $4.62. So these shares in this company are illiquidly traded. Yeah, it wasn't that long ago. The share price was only $4.38. Now it's $4.50 on one share. Not one share, one trade, 646 shares traded. Let's have a look at Judo. This one could be a breakout. Share price up 10%. Oh, yeah, this is looking interesting. This could be a breakout for Judo Capital, up 10.8%. So definitely putting that on my list. So we have a couple of breakouts. Ansell, Judo, is that it? Looking more interesting for KMD, but definitely Ansell and Judo Capital. I do like this chart. Share price going sideways for a while, and today sudden lift in the share price. I wish I was trading this, then I got out because the share price was going sideways. And then we got Integrated Research. Oh, this is the last company I want to talk about, I think. So some of the other, just before I mention here, some of the other companies I have not mentioned: Perenti, Mercury New Zealand, Hub24, Deterra, Retail Foods Group, Sims Metal, Vicinity Centres, company with the T code REP, RAM Essential Services Property Fund, Helia, I think that's Helia, HLI, cancel. Helia Group, company with a T code AUC or AVC, I don't know what that is. Auctus, I think it's Auctus. Auctus Investment Group, and Ingenia. I think actually this share price of this company is up. So let's have a look at this company's chart. Okay, this could be a breakout as well. Ingenia Communities, there you go. I'm going to put that down as well as a possible breakout. Okay, and I think that's it. I could have missed one or two, but that's all the companies that have recent results. So a lot of these other companies, I have a feeling the share price hasn't moved all that much. For instance, I thought Retail Food Group looked pretty good, and then share price has done nothing. Actually, it's down 4%, and the chart looks nothing. So have a look at some of these other charts. Hub24 chart looks pretty good, I think. Now, Integrated Research is just interesting because of the violent movement in the share price during trading today. I'm going to show you, yes, look at that. Share price got as high as 87 cents. Now it's 68 cents. So the share price has fallen 25% from its high. And if you have a look at the 1 minute chart, yep. So a fair bit of buying on open or just after open, their share price has just collapsed during the day. Not sure why. Maybe there was a conference call that I completely missed. So let's have a look at Integrated Research. What has caused this? Just share price keeps on dropping. Okay, so nothing there. I'm going to open up the announcement and the presentation. So on first read, it was pretty good. So profit of 27.1 million, up 193%. Cash at bank, up 72% to 31.9 million. Final dividend of 2 cents. I don't really care about the new CEO. I think I mentioned that. Not the most inspired hiring, particularly on his history. Now, some of these numbers were down, blah, blah, blah. Here's the table. So pro forma revenue was actually down, but revenue was up. Net profit went from highly negative to highly positive. EBITDA 24.6 million. Pro forma EBITDA 16.7. So those numbers are pretty high for a company with a market cap of, I'm thinking the market cap is like 120 million or something like that. 118.7 million. Now it's down. So those actually are fairly high numbers for a company with a market cap of 118.7 million. Now, the only thing I could think of, I haven't not looked at the presentation, the only thing I could think of, negative thing, the main negative thing I could think of was in the financial year 25 priorities and observations is the first bullet point in the financial year 25 section, the observation section. Renewals book is softer to the prior year and is weighted towards second half of financial year 25. Renewals skewed mostly towards Transact and infrastructure clients. So I actually did read that and I went, oh, I don't like the wording of that. That's softer and skewed to the second half. So I'm not sure if that's set in stone, but I did not like the reading of that. But then the share price opened up 10% higher. I went, oh, okay. I was maybe overreacting. And now the share price is down 10%. So who knows what's happening with Integrated Research. So it just shows you, a few companies I've shown you today, that reacting on open is sometimes not the best thing to do. Not only for like Integrated Research, share price could open up higher and then drop significantly through the day, but I've seen the reverse happen. Share price opened much lower on open, and then share price rallies during the rest of the day. I've seen that a few times as well. The prime example was Doug Technologies. Yes, Doug Technologies last, was it February? You can see it in the daily chart here. It's a beautiful, here it is. Yeah, the 28th of February. Share price at one point in the day went, and this is near open, $1.80. It closed that day at $2.44. Yes, you could have bought at the low, $1.80, and made, what's that, 33% during trading that day from the low to the end closing price. And really interesting one-day candlestick. So a bit of an overreaction for the market on that day for Doug Technology. So I do like to just stand aside and just wait to see how the market reacts through the whole trading day and then make a decision. Sort of like what I might do with Judo Capital today, or even Ingenia. I don't know anything about Ingenia. Anyway, that's all I have for today's video, today's ASX Daily Rundown video. I'm going to have a look at Integrated Research's presentation. If you have any questions, any thoughts, leave those in the comment section of this video. I'm sad I didn't get into any of your comments because there are a few there. Anyway, any questions, leave them in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.